Welcome. Today we're going to go over how to make sure you make money and not lose money in real estate. And that is by investing by numbers and getting rid of the emotions, getting rid of greed, getting rid of delusion, any of those things. That is why 70 to 80% of the people that start out fail. After thousands of transactions, hundreds and hundreds of investors that we've helped over the last 20 plus years, what we've noticed is those who typically lose money invest by emotions and not these numbers. If you're new to our channel, hi, I'm Mike Bond, and we are here to help you get the knowledge to be the best real estate investor you can. Because we want you to make the money that you need to live the life you want. To do that, make sure you hit the like button and subscribe so you can follow other videos just like this one. So we've been lending for 20 plus years, we've done thousands and thousands of transactions for real estate investors. What's the one key concept that we see for people who actually make money and those who lose it? Typically, the people who are losing money are investing by emotions. They are into greed, delusional on their numbers. They have a fear of losing out on every transaction. So what we want to show you today is how to make sure you make money in real estate, and that is investing by the numbers, the analytics, and not the emotions. So what are these magic numbers? They're not even magic at all. They're just understanding and sticking to whatever numbers you know make money. There's credit score you need to know. There's DSCR numbers, there's ratios, but we're going to go and look at a fix and flip and what are the numbers you need to know so you make money in real estate. We're going to use the number 72.5. That's the total number that we are going to use that you should be maxed out on your purchase price in rehab on a good flip. Now, if you're doing a quick flip, maybe there's some things that you can work on. But once you start going above these, you're going to find magically the money disappears. So let's look at an example. We want to get to that 72.5 maximum ARV number after the repair value. So we're going to start out with a property that we think will sell for, because the market shows that it'll sell for $300,000. Now, we've done our numbers and we know we want to be at 72.5%. In this particular deal, because we've gone out and had a contractor look at the property. So we know that the number is going to be about 12.5% to rehab it. So that leaves us about 60% to purchase. So if we stick by our numbers, if the rehab is a little bit higher, the purchase price has to be a little bit lower. If the rehab is lower, we could play with that 72.5% between the purchase price and the rehab. Now, also knowing our numbers, we only want to spend about 4.5% for a realtor and about 5% for the cost of money for that 4 to 6 months, and then about 3% for miscellaneous items that may come up. So we have the 60% for the purchase, we have 12.5% for the rehab, we have 4.5% for realtor, we have 5% for money, and 3% for miscellaneous, insurance, closing costs, all of those things. So when it comes down to it, our all-in costs are about 85%. That leaves us 15% for profit, because that's why we're in this, to make some money. That's why we do this. So on a $300,000 property, if we are making 15%, that means on this transaction, we are going to make $45,000. But just wait, let's look and see what happens with most people. And when I say most people, I mean most people who do not make money in real estate. What they do is they find a property and they fall in love with it. Instead of paying 60%, they're like, I could go up a couple, 2-3%. So let's say they buy for 62%. And then maybe they're not spending or they're watching their contractor as much. Instead of paying 12.5% for their rehab, now they're at 15%. And remember, these numbers could change and vary. We just want to keep all of our numbers under 85% or better, and better means less than 85%. And let's just say we love our realtor, and instead of paying them 4.5%, we're going to pay them 6%. So we've gone up another 1.5 there. And let's say we love our money guys, so instead of paying 5% for this 4 to 6 months, we're paying 7%. Maybe you don't love them, but maybe your credit isn't there. Maybe you haven't shopped around, something like that. And you've also mismanaged some of the overages in what you're paying, and now you're at 5% for your miscellaneous or other. So you put all these numbers together, and what do you see? Now, instead of making $45,000 in your spread at 15%, you're closer to that 5%, and your numbers come out to $15,000. Or maybe something runs over and it's even worse. So here we have two people, and let's say one makes on the same property $45,000 and another person makes $15,000. That's a big difference, especially if you think they've done 3 flips or will do 3 flips in a year. So on one case, you have one person who's making about $135,000 in a year, and that's pretty good starting out with flips. And another person working their butts off on these 3 deals and making only $45,000, which is harder to live off than $135,000. And we understand sometimes, starting out, maybe that first one is a little bit thinner because you have to do a little bit more and you do hit that 15. The trick is to make sure your second and third don't stay there. They get up to the $45,000 in this example. So remember, investing by the numbers, which this means is know your numbers, know where you want to stay, and stay with them. If you have to pay a little bit more for the property, then you have to cut somewhere else. Maybe have your realtor take a little less money or find cheaper financing, or make sure your other costs, your overages, are less than they should be. So don't let your emotions take over, like most people who fail in this business, who get frustrated, broke, and probably actually owe more when they're done real estate investing than they came to the table with. So I have something free for you to download. Before we get to that, if you like this video and you want to keep learning, check out our channel. We have a lot of great videos. Like I said, we are focused on making sure you make money because we've seen way too many people flop just because they get emotionally tied to properties. So check below for a quick deal analyzer. It'll help you figure out where your numbers can be or where you want them to be. You can analyze them and make sure you stay on track. So if you want to keep the money train rolling, click on the next video and we'll see you there.